I'm Chris Preston, and welcome to Street Check, the best one-person podcast in the history of Cabot Wealth Network. It's just me today. I was just Brad last week. Apologies. I came down with some sort of stomach bug that right as the podcast is about to record, so I was not able to join at the sort of the last minute. So thanks to Brad for filling in last week, and to Tyler London, who was our guest. We do have a couple more guests today. Brad is out on, I believe he is, Madison, correct me if I'm wrong here. Brad is taking a bus full of teenagers to Disneyland from Arizona, like overnight or something. Is that right?
I
Yeah.
think so.
Wow. Brad is the driver. I can't even, I wonder if this is going to be a very serious bus ride or, if Brad's going to let them let their hair down. I don't really know.
Let's try to picture him as a chaperone. Just
Yeah.
chaperone Brad is
Yeah. It's fun to think about.
I it's fun to think about as long as he's wearing the Mickey ears, which I know that he's not, but in my
Yeah.
head, that's how he's going to Disney.
Yeah, gosh, I would love to just get some video recordings of that and just see what it's like if he talks to them about quibbits or semiconductors or anything. Okay, so I just want to talk, a few things before we welcome on our guests. We're going to have Mike Cintolo, who's Cabot's chief investment strategist, and Jacob Mintz, who is Cabot Options Trader Pro, and Cabot Profit Booster chief analyst. So we're gonna have them on sort of a roundtable. We'll go roundtable styles to talk about the market. Market is obviously in a much better place than it was uh, even a week ago, but especially a few weeks ago. Over the weekend, last weekend, since we last had a podcast. There was a 90-day pause. There is a 90-day pause instituted last weekend by President Trump with China on all tariffs. So same thing, same sort of market reaction or similar market reaction to after the 90-day pause and all the other tariffs in mid-April. Jubilation. Markets are up. S&P was up 3%, a little over 3% on Monday, and it's continued to sort of slowly creep higher since Nasdaq was up 4%. So, the major indexes are up 3.5 to 5% in the last week or this week. Um, One big thing is that the S&P crossed above its 200-day moving average for the first time in 2 months. Why does that matter? I mean, a lot of times people can consider, technical analysis like that 200-day moving line sort of, mumbo jumbo, hocus pocus, that kind of people might not be full believers in that, but just to go off of what the last couple times that during this bull market that the market moved forcefully above its 200-day line, both times stocks continued to new highs, new all-time highs. Uh, the rally continued anywhere between 3 and 5 months until a top. So does that mean necessarily that's going to happen this time? No. In fact, the first time that the market moved, S&P moved forcefully above its 200-day moving average during the current bull market, which started again October 2022. So basically 2.5 years ago. That was in January 2023. Stocks sort of had a false start. They had a nice rally from in November and December and into January, then topped out in about mid-January and pulled back pretty sharply, all the way below the 200-day line, and then got going again, that spring. Could this be a similar false start? The tariffs are on pause. They haven't gone away. The only deal that's actually been struck, which Brad, I'm sure, talked about last week, was the one with the UK. That's the first real country that's, we've actually struck a deal with that's more than just, temporary pause. Trump has hinted at, more definitive tariff rates forthcoming. He mentioned something today about, countries will, he's going to tell nations their tariff rates within weeks. which is good because the deadline for the 90-day pause on most countries other than China would be in early July. So the closer we get to that, the more sort of uncertainty might emerge. But could this be the real deal? Could we just be headed for new highs? That's something I'm going to talk about with Mike and Jacob to get their perspective on. There's no one better than them, both from market and stock perspective, growth stock perspective, from Mike, and from the options market, what he's seeing from Jacob. So we'll get into all of that. Um, the other bit of good news this week was that inflation came in cooler than expected. Not a whole lot cooler, but the headline number was 2.3%, which is the lowest, and that's year over year growth, lowest since February 2021. So lowest in more than 4 years. 2.4% was expected, but even just fractions of a percentage, a tenth of a percentage in this case, matter. It was up 0.2% for the month. I believe 0.3% was expected. So the market like that, it didn't take off, but it had already taken off on Monday. But I think that that's also sort of helped. There was no pullback after such a forceful run up on Monday, and I think the CPI data sort of contributed to that. So the one thing is that the Fed now is expected to hold rates again, as they did in May, hold rates again in June. That has flipped about a month ago, April 16th. Only 29% of economists expected that the Fed would keep rates steady as of next month in their next meeting, which is June 18th. Now it's up to 95% or 94.8%. Only 5% think that the Fed will cut rates next month. In July, July 30th is their meeting then. Still only 69% or only 29% excuse me, 31% think that they'll cut rates by one, a very small percentage, 1% think that two rate cuts by then. But 69% think that they'll hold rates steady in July. So that's a change. So that is something that could loom over the market a bit, and President Trump could get impatient with that if that indeed comes to fruition and the Fed continues to hold rates. He's been made no bones about him wanting Powell to move faster, to cut rates quicker. So I wonder if his rhetoric, anti-Powell and Fed rhetoric, will heat up prior to the June meeting if it looks like the Fed isn't going to cut rates, and especially after the June meeting if they don't. So that's something that's sort of out there that could weigh on the market. But there's been a lot of good news. The better inflation report, the pause on tariffs, the deal with the UK on tariffs, jobs report strong, earnings have been really good. Q1 earnings season is just about over. Let me pull up the FactSet earnings data. Q1, 90% of companies reporting, and the growth rate is for S&P companies is 13.4%, which is really good. Almost double the 7+% that was expected at the beginning of the quarter. Be the second straight quarter of double-digit earnings, and that's a really double-digit earnings growth, I should say. That's a really good sign. So there's been a lot of good signs about the economy. The hard data again is sort of outpacing the soft data, and the soft data being investor and consumer sentiment, which again is improving. Even calls for a recession have cooled off in the wake of some of the positive tariff news, and certainly with the jobs report and the inflation data. So we're in a good place in the market, or a much better place than we were a month ago. Brad and I were there's one podcast. There was some dark times for us here a few weeks ago. So happy to talk, much happier to talk market today. And to help me do that, I will welcome on Mike Cintolo and Jacob Mintz in just a second. Hey, welcome on today's guest, Mike Cintolo, Cabot's Chief Investment Strategist, Chief Analyst, Cabot Growth Investor, and Cabot Top 10 Trader, and Jacob Mintz, Cabot's Options Extraordinaire, Cabot Options Trader, Cabot Options Trader Pro, Cabot Profit Booster. Um, Brad's not here today, so we can have some fun. He took shots at me last week when I was gone, so I feel no regrets. Um, but first, obviously, we want to start with talking about the market, which is obviously way improved from. I can't remember when you guys were last on, but Brad and I went to some dark places last month on some of these episodes. So things have improved, and it's a little more fun to talk about the market. Mike, I'll start with you. You've written the last couple of days that while the indexes have obviously improved, above the 200-day line now, growth leaders haven't really emerged yet, and that's one thing you're looking for. Have you seen, I guess, have you seen anything that gives you hope that that's going to happen pretty soon here?
Yeah, yeah. Well, I can't time it, but no, I'm definitely optimistic. It's not unusual to have if you have a huge break and kind of a V bottom. Like sometimes, like 2020, we had a ton of leadership right away because that was like the work from home thing. That there was a lot of those names that were holding up the whole time. But it's not unusual, like with these V bottoms, like the initial 3, 4 weeks is kind of the off the bottom stuff. But obviously, if the market's going to go up for another 6 months or whatever. Like some things are going to have to hit new highs for that to happen, you know? So I mean, I'm seeing some improved action this week. We saw like, Uber Toast, Insulet, just some of these things gap on earnings and a lot of the stuff that kind of was sort of quote off the bottom. It hasn't given anything back this week. It's not like a gap and got
Right.
sloppy. So I can't predict it. And like, I'd rather see it before I plow in, I'm not going to say, oh, these are all definitely going to break out. But I think so far it's according to plan. Now, if it's 3 weeks from now and a lot of these things get really sloppy and they're down 14% next week because the market wobbles, like that would be a different story. But right now, I'm pretty optimistic that there's certainly a lot of stocks that look good. It's just a matter of can they actually get through resistance.
Right. In Cabot Growth Investor, you've started deploying some of your cash. I know what did you get to 80% cash at one point? Something
Yeah,
like that?
we've been over 80. Yeah, I don't
Over
remember.
80?
I mean, we were 85, but I mean, we were 75 to 85 for like 2 months, pretty much.
Right. And now you're at what, 50 to 55, something like
Yeah,
that?
like around near 50 or whatever. So hopefully that's 30 pretty soon or whatever. So as these things go, I'll latch onto them. But we'll see. We'll see. A lot of these things just like the Nasdaq itself, they've ramped. It's great. It's a good thing that it's ramped, but it's also right back into resistance. So it's like, okay, like let's see what happens from here.
Right. Jacob, what are you seeing in the options market? Are there any tells in terms of buying, or are you seeing sort of the same thing?
I'd say the last couple days it's gotten very bullish. Now today's quiet. It's a Friday. And we're kind of in the summertime. But just the last couple days, there's been monster call buyers in Amazon, Microsoft, Google, Netflix, Tesla. So like the money is racing back in. I think there's just a lot of folks where, the market got ugly. They lowered their exposure and now they're racing back in via call options. Now I will say there's been a big buyer of longer term calls the whole time. There's a buyer of 2027 calls, so calls expiring in a couple of years that were willing to, get involved with this market on a longer term time horizon. So yes, I'm actually pretty bullish on the market right now. I think we could chop around for a couple of weeks. That'd probably be perfect if we just, chop, 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 and then we got going. But I'm definitely bullish because my watch list has exploded in terms of names that I'm watching. So, and it's not just Netflix and Microsoft. It's just a wide variety of stocks, which is always kind of encouraging for me.
Yeah, that's what I was going to ask. You mentioned, huge call buying in Amazon, Microsoft, Google, Tesla, sort of the usual suspects. I mean, so it's not just the Mag 7 that are really taking off. You're seeing it other places too.
Yeah, I mean stocks like Uber, a lot of call buying, Robinhood, some secondary level type of stocks that are really seeing a lot of upside call buying. And so I'm intrigued just by just the market in general, not just the Microsofts and those types.
I mean, is it into, mostly growthy stocks, or is it sort of widespread at this
It's
point?
widespread. I mean, it's all over the place to be honest. It's mostly led by growth, but there's like I don't know, like a stock like Kenvu, symbol KVUE. That's
Yeah.
a consumer, I don't even know, medical type play.
Johnson and Johnson spinoff, I think,
Yeah,
right?
yeah. There's
Yeah.
there's Pod like Mike talked about, Axon, Crocs, Texas Roadhouse. It's kind of all over the place. So I'm definitely seeing strength in a lot of different stocks and sectors.
Mike, in terms of tells, what would give you sort of a full green light? I mean, is it mostly just about seeing more individual leadership emerge, or is there some sort of tell that would give you, I guess, like maybe you're somewhere between a green and a yellow light now? What would give you sort of a full
Yeah.
green light?
I think it's really just stocks. I guess if you're looking at a quote indicator, just more new highs, I guess, but there's no like magic number on that I look at. But there's just, yeah, like Jacob. I have a lot of stocks that I think look good, and it's not hard to fill up a watch list. Let's put it that way. And honestly, it hasn't been for a few weeks. I just want to at this point just see them if they can break out, maybe after a little bit of a breather, like Jacob said. But that's really it. And as they do that, you just latch on. They're not all going to work, of course, but you cut those, average up on the ones that do work, and hopefully hop onto a few winners. I did want to say something like Jacob said, like in terms of the tell, the big picture is like what's so encouraging. It's like you had the panic selling, you had the terrible sentiment, you had the headline news where everyone's in, I think, Jacob's mind too, like in-laws were like, hey, what's going texting you that never talk about the market? What's going on with the market? You know what I mean? Then we get these, I know Jacob loves these, I'm being sarcastic, but like the 3-day thrust and some of these things off the lows, and now this persistent advance and some things getting so everything seems set up for, higher prices. I'm just trying to wait for some of these things to move. If I was more aggressive, I would just buy stuff and say, well, it's going to break out. But sometimes I've done that in the past and it's burned me a little bit. So I'd rather just wait. And some of these things, even if the market goes higher, some of these might not break out because they're not really leaders. And then the others goes. And that's telling you that those are leaders and those are the ones you want to buy.
Yeah, and I will say there's all types of, when a stock like General Electric is going higher every single day, when the financials are pretty much at their 52-week high, when European stocks and all world stocks are at their all-time highs, that's not exactly a bearish sign. So there are,
Right.
it doesn't have to be Microsoft, Tesla, and Netflix and Google. There's money being made everywhere right now in the market. Now it's just a matter of, will it keep going? I'm kind of like Mike. I'm just, buying a position here, waiting a couple days, seeing how the market reacts, buying another position. There's no lack of ideas and opportunities right now.
I get to say, Chris, just on a macro, not a macro, but on a bigger picture. And I think Jacob would agree with this. Like, say we had this, what I'd love to see. I guess I wouldn't love to see it, but say this weekend or some point, some new trade tensions come out or something like that. And the market, dips, opens down 1.5%. But then 2 days later, it's higher, it's higher than it started, sort of thing. If you start to see that where the market's just kind of, and we're looking at October, we're not really worried about the next month or two of these negotiations. That would be another sign that I think the market's, in good shape.
And this is such a weird, what happened in April was so weird in that I don't know what the precedent is for this. So I was going to ask you, Mike, since you're good about sort of market history, NASDAQ at small caps going into bear market territory. S&P didn't quite get there. I think it was almost 19%, I think, from top to bottom. Can you remember seeing that where there's like a disparity between, indexes and then just an immediate bounce back?
Uh, well, so actually, this rally didn't work, so I don't want to cite it. But after 9/11, that was one. Yeah, but it's rare. It's basically a news-driven panic. Obviously, COVID, that sort of thing. The pattern was tracing out exactly like 1998. Not that these things ever are exactly
Yeah.
like long-term capital management, and that ended up with a retest. But I would be at this point, I would be surprised if that happened. So. But yeah, no, it's kind of a news-driven panic, and then people come back. As long as we get some leadership here, I think we can. Yeah, I think we can really run. The sentiment is so bad out there. It all happened so quick. I thought it was going to take time. After last November, December, we have who's the guy, Jacob, that threw in the towel in December? He was like a bear forever, and then he like wrote like a public note. It was all over Twitter.
Yeah,
He threw
I
in the
don't
towel.
remember, but yes, there's been all
Yeah.
types.
And I was like, this is going to, and then once we topped out, I was like, this is going to take a while just to sentiment. But I think because it was the tariffs were like so headliney, everyone was talking about them sort of thing in the real world, as opposed to this market stuff. It just caused retail and institutions to get super negative.
I will say, just in terms of fear in the market, the VIX is back at 17 and a half,
Right.
which it was at 60 a
Yeah.
month ago.
Yeah.
So the fear has dropped out of this market in the blink of an eye. Now, in my mind, that's a positive sign. If you were, if you wanted to bet against the public, and that would be kind of a worry. But the VIX is 17 and a half. That means that big traders, the hedge funds, the institutions are no longer reaching for protection against a deep market decline. So that's, in my mind, a very encouraging sign.
Yeah, I mean, all right, so let's just briefly touch on macro. I know you guys love doing this. Um, so,
Jacob doesn't even know what a stock to do. Like, yeah, he's like,
Yeah.
um, what do you think? I mean, is it just tariffs? You think, obviously we're on 90-day pause with everything, but I guess the UK is the one real deal that we've actually struck there. Um, what do you think could actually bring fear, volatility back? Is it just, getting closer to the end of these 90-day pauses and no deal being struck? Or what sort of like, what makes you worried, for lack of a better word, of, that fear could come seeping back into the market?
me. I mean,
I'm,
Either of you, either of you.
I just think uncertainty. I think if there was I think when the uncertainty has come off, it's like, okay, we can deal with whatever, 10%, 20%, the number is less important. So I guess if there was another big wave of uncertainty, whether it was tariffs or something else, I guess. But I don't know. What do you think, Jacob? I mean, I still think it's pretty news driven out there, obviously, like this Monday with the
Yeah.
China US truce, so to speak. But I guess I would just say if there's, whether it's Trump or the economy or something happens where there's a ton more uncertainty.
I would just say this. I was writing about this for a couple weeks as the market was starting to rally. There was so much bad news. The bad news kept coming and kept coming and kept coming, but the market stopped going down. A month and a half ago, when Trump or whoever would talk tough on tariffs, the market would fall 3% in the blink of an eye.
Yeah.
And then it became he would talk, he or some of his representatives, whatever, not political, would talk, and the market might fall 0.5%, 0.25%, and then snap right back. So it seems like the market's kind of digested all this tariff news. But what had me worried personally, I don't really care about the tariff stuff too much. If Palantir goes from like 130 to 115, in a couple of days, then if we start to see those type of leaders start to break down, that would be way more concerning. If Uber gives up its recent moves, that's the type of stuff. If the semiconductors give it all up again, the financials, that's what would worry me. But so far, I'm not seeing a lot of that.
Yeah, you're right. Yeah, I wrote this week, I wrote my stock of the week issue on Monday right after, the positive tariff news with China. Tariffs giveth and taketh away, not necessarily in that order, in the last month plus. And yeah, it kind of sucks to be in a news at the mercy of, that kind of news. But you're right, Jacob, that like that's a good sign that the fact that the bad news kept coming and the selling sort of stopped, I guess maybe was a tell that this, that all the what do we call them, the weekends had been weeded out and there weren't many sellers left. It seems like how quickly we've gotten back above sort of the 200-day line after it was like 2 months, it was below it. It seems like the gravitational pull of the market is still bullish right now. Is that fair?
I think so. I mean, I yeah, I mean, I think we had the selling, we've had the market's probably done about as well as if you had to draw up a script and said like, okay, we're at the lows here, what's it going to look like in the next month? I mean, we farted around there for maybe a week or two after the lows, right, Jacob, or whatever. I remember I was on vacation and it was that Monday, like the market got hit. And then it's just been kind of straight up from there. So it's kind of done exactly what you want, which is like what Jacob's saying is what you want. Yeah. So if from here, if Uber falls 12 points in a week or something, that would be kind of like a few stocks did that. That would be the warning sign. But I definitely think that, there's been no pullback. I mean, the market could have easily pulled back after the good news on Monday. You know what I mean? But so far, it's really just hasn't wanted to pull. I mean, maybe by the close or whatever today, it will pull back, but it really hasn't wanted to pull back at all. And these stocks haven't wanted to pull back at all, despite huge moves in the last couple of weeks.
I know you guys also love looking at your crystal balls. We always say that ours what's the Cabot term that that crystal ball is in the shop or broken or whatever. But I'm going to ask you to make a prediction. Um, End of the month, do you think we're higher or lower in terms of the indexes?
End of May? Jacob, this is your time frame. I
Yeah.
expect perfection on this call.
I don't know. I'm not that good. I'm not even close to that good. I will say that we chop around. We mess around for a couple weeks and then we kind of get going again. I just think that there's so many traders who de-risked, who were short,
Yeah.
that there is just if we get going, we're gonna go because people, traders, hedge funds, institutions will be chasing this thing higher and higher. That's my kind of dream setup. We chop around and then we get going and then it's on in the summer. So my crystal ball is certainly broken.
Mike?
Yeah, I'll go along with that. I do. I mean, I think at some point I feel like we're short term set up for some higher than expected inflation reading or just some news that the market can use to sort of digest, sell off for a couple days, bounce back, that sort of thing. So I'll say, the same or down slightly, but overall, I really like the tenor of the market. My main prediction is the Patriots will have a better record than the Bears next year. Are we
Yeah, I
done
knew
with
you
that whole
were. So
thing?
I was going to transition to this. So all right, I'll give you the floor, Mike. First, Patriots draft sounds like people were pretty high on that, and you're bullish.
I'm pretty bullish on the Patriots. I'm bullish on them being competitive. Of course, they also have a I mean, the Bears play, the Lions twice and the Packers twice. The Patriots schedule, I think, is like the third on paper, the third easiest next year or
Went my
something.
Bills twice, but that's about it.
Yeah, yeah, no, that's true. But I mean, like even the Dolphins, Jets, I mean,
Yeah.
whatever.
Yep.
So, but anyway, so we'll see how it goes. But no, I just think they finally have some good coaching, some decent talent, and a higher floor. I don't actually think they'll make the playoffs or anything, but I think they'll compete for like the last spot or something like that. I think they got a shot to actually surprise on the upside this year. And our quarterback wants to be on the team, unlike the Bears.
That's what I was gonna say. Yeah, Jacob, do you feel like Caleb Williams when I asked you to come on this podcast? So it's like I don't want to be there.
Uh,
What was it? He said he didn't want to play for the Bears, but they drafted him anyway, basically. Is that what happened?
I pay attention to as much tariff news as NFL offseason news, so I don't know. And if it's negative, I certainly don't pay attention. So I'll
Right.
let you guys handle the football talk.
To be fair, I think it was just before the draft. He's like, "Oh, Chicago's killed a bunch of quarterbacks," but they got Ben Johnson now. I mean,
Fair.
I'm sure he's
Fair.
fine. They got all sorts of weapons, and the test will be on this year.
Yeah.
It's summertime. We're not talking football. It's
I
summer.
know.
Each
Yeah,
time.
I
No,
mean,
no,
Mike, I
no,
would ask you if you're in mourning about the Tatum injury,
oh my goodness.
but I think you're maybe not as diehard a Celtics fan.
Well, no, I mean that's one reason I'm kind of like we're on to the Patriots. But although no, I'm still rooting for the Celtics. I mean, tonight will be fun to see if they can pull it off. And they still have a great team, even without Tatum. But yeah,
Too.
that injury was.
Yeah,
If you're going to have that injury, you'd rather have it 6 months ago, or he'll be back, next year.
yeah,
But so
Achilles tear. Yeah, I think what is it, a year out minimum. Yeah, my son, everyone. So my son's 11, and he and all his friends all have Tatum jersey. Like they almost like it's
yeah,
almost like the Lakers thing. They almost like were Lakers fans like Kobe more than the Lakers, or as much as the Lakers. It's the same thing with Tatum in New England. I don't know if your kids that's their experience, but telling him the next morning, Celtics lost. Tatum's done for the year. Yeah, so I could see him like trying to hold back tears.
and
Um,
it
yeah,
happens. Yeah, it's yeah. It wasn't my favorite. Monday wasn't the best.
yeah,
Monday night, Tuesday wasn't the best 24-hour stretch there.
right. Um, okay, well, one thing I wanted to mention before we go, I think we're offering, if you go to cabotwealth.com/street, we're offering Mike your Cabot Growth Investor service for 20% off the normal price for today's listeners. So if you go to cabotwealth.com/street, you will get access to Mike's Cabot Growth Investor for 20% off the normal price. And like Mike said, he's been adding some new stocks in there, using some of that excess cash that was in the portfolio probably just a few weeks ago. So it's a good time to join. Any just last thoughts? What you're looking for? Um, just general market thoughts before we sign off here.
I mean, I'd say just it seems like we're getting back to normal trading conditions. This is when Jacob and Mike kind of cook. So
Yeah.
this is encouraging action.
Yeah, no, I agree. I mean, I'd like to see a little bit better from growth stocks and stuff like that, but I'm optimistic it's going to happen, whether it's, in a week or 3 weeks or whatever. Um, yeah, no, I just, like I said, the bigger picture, I'm bullish. I'm excited because the bigger picture setup is there, meaning you've already had the meltdown, you've had the negativity, you've had now the enough of a rebound, not just like a bounce where you're guessing that it's a low. So if things go according to the plan, that should be kind of call it your cyclical bear market or whatever label you want to use. And then we go up for another whatever, 6 to 18 months, depending how things play out in the future. So yeah, I'm optimistic, especially with the big picture.
Optimistic is a good place to end it, and a much better description than where we were a few weeks ago.
Yep.
Mike, Jacob, thanks for joining, and thanks everyone for joining this episode of Street Check. We'll be back, unfortunately, with Brad next week, and we'll see you then.